Hello traders, welcome back to the Forex Gig where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we are going to be talking about the Volume Zone Oscillator, a powerful indicator designed to help you analyze volume in relation to price movement. Whether you are trying to identify trends, spot overbought and oversold conditions, or pinpoint potential entries and exit points, this tool can provide valuable insight for your trading strategy. So you have to make sure you watch until the end because we are going to cover everything from understanding how it works to partially to the practical strategy you can use to trade more efficiently with it. So let's get started. We start by understanding what the volume zone indicator or volume zone oscillator, which is also called the VZO, is all about. This is an essential tool for any trader looking to understand the market dynamics through the lens of volume and price. It operates by combining volume data with price movement to provide a clearer picture of the market trends and the potential reversal. The VZO is plotted on a percentage scale ranging from the minus 100 to the positive 100. It's ranged from minus 100 to positive 100. As you can see from the indicator here, it's ranging from positive 100 to minus 100 as the case may be, which helps you to easily identify the key levels that the signal difference in market condition. At the core of the VZO are several key levels that you need to pay attention to, which are the positive 60 level, positive 60 and the negative 60 level. These levels indicate extreme overbought and oversold condition respectively, which when the VZO reaches this point, it suggests that reversal might be imminent. For example, if the VZO hits positive 60, if its VZO reaches positive 60, it could be a sign that the market is overbought due to and is due for a fall back. Why if the VZO hits minus 60 is a sign that the market is oversold and is due for a pullback. Now, the other level you need to take note about on this indicator is the positive 40 and the negative 40. The positive 40 and the negative 40. In this area of the indicator, positive 40 and negative 40. These levels represent strong bullish and bearish momentum. If the VZO crosses above the positive 40, it indicates strong buying pressure, while if it crosses below the negative 40, it suggests strong selling pressure. The next level we need to take note of is the zero line. The zero line over here. The zero line is the center line of the oscillator. It is this central line of the oscillator. When the VZO is above 0, it indicates a bullish trend, whereas a reading below 0 signifies a bearish trend. The next level you need to take note of is positive 15 and negative 15. The positive 15 and the negative 15. These are the levels you need to take note of. These levels serve as early indications or early indicators of potential trend reversals in non-trending markets. For instance, if the VZO crosses above 15 in a sideways market, it might be an early sign of an emerging bullish trend. So when you incorporate these levels into your analysis, you gain insight into the market sentiment and potential turning points. By understanding how volume interacts with price through the VZO, you can make more informed trading decisions. Remember to look for confirmation from other indicators or chart pattern to strengthen your analysis and improve your trading outcome. So let's see how we can trade using the VZO or the Volume Zone Oscillator. The VZO is a versatile tool that can be used in different trading strategies to improve your trading decision. Whether you are looking for to trade with the trend, spot reversals or identify divergence, the VZO provides clear signals when combined with proper analysis. So let's break down how we can use this effectively. Now, the first way we can use them is by trading with the trend. One of the most effective way to use the VZO is by trading in the direction of the trend. And to do this, you would need two additional tools, which are the 60 period EMA, the 60 period exponential moving average, to identify the trend direction, and you would also need the 14 period average directional index, which is the ADX. You need the 14 period average directional index. These are the two indicators you need while trading with the trend. First of all, to look for a buy signal, when price is above the 60 period exponential moving average, the VZO crosses above -40 or above 0, this indicates bullish momentum. First of all, to spot your bullish momentum, price has to be trading above the 60 moving average. You also spot on the VZO that at that area price is above 0 or is above -40. This indicates we are in a good place to look for buying opportunities. While if we are looking for selling opportunities, first of all, price has to be low the 60 period exponential moving average, and the VZO crosses below the positive 40 on the VZO. As we can see in this area, it is below the 40 positive 40 VZO. It is trading below this region. This signals bearish momentum. This is where you might consider to sell. Similarly, in a downtrend, price stays below the EMA and the VZO crossing below 40, it has to confirm selling pressure. Now, you can also use this indicator to spot oversold and overbought conditions. The VZO extreme levels, which is the +60 and the -60, are excellent identifying overbought and oversold conditions in the market. These levels can help you spot potential reversals or exits from existing trades. How do we do this? For the overbought zone, when the VZO reaches positive 60 or higher, when it is in positive 60 or higher, as we can see at this area of the indicator, positive 60 or higher than that, it suggests that buying pressure might be at its peak and a reversal could occur. If you are holding long positions, this might be a good time for you to take profit and tighten your stop loss or close the trade. Now, how we spot oversold positions is when the VZO drops below -60. when it's below minus 60, areas where it is below minus 60, let's see where it is below minus 60. Areas where it is below minus 60, in this area, it indicates that selling pressure have reached its limit and a reversal to the upside could occur. And this can be an opportunity to be looking for buy setup. And at this area in price decided to go to the upside. Now we can also spot divergence using this VZO and the price chart. How do we spot divergence? We look for divergence on your chart by comparing swing highs and lows. We look for divergence by comparing swing highs and lows of both price and the VZO. For example, if price forms a lower low while the VZO forms a higher low near the oversold level, that's the minus 60, this could signal a strong buying setup. But when if price makes a higher high, like in this area, that's for a bearish divergence. If price makes a higher high while the VZO makes a lower high, as we can see, this area that price made a higher high, the VZO was making a lower high in this particular area in time. It indicates weakening buying pressure and a potential reversal to the downside. Look for divergence on your chart by comparing swing highs and lows of both price and the VSO. Now we can combine with other indicators to increase the accuracy and reduce false signals. You should compare or combine the VZO with other indicators like the support and resistance levels, candlestick patterns, or tools like the RSI or the MACD. These are the indicators you can combine this strategy with. It helps to confirm signals before entering trades. So in an uptrend, after confirming by the EMA and the ADX, after confirming by the EMA and the ADX, let me add my ADX to the chart. After combining with the EMA and the ADX, if the VZO crosses above minus 40, while the RSI, let's understand this, if the VZO crosses above minus 40, from this area is crossing above minus 40, and the RSI, which is the relative strength, the RSI, quickly add up my RSI indicator. My RSI shows bullish momentum, and from this area when it crossed above, from this area, let me close some of these indicators. From this area when it crossed above minus 40, when it crossed above minus 40 on the chart and on the VSO, when it crossed over minus 40, we can spot that our RSI is also showing a bullish momentum, which is above 50. At this area it was getting above 50. This adds confidence to your buy decision. If you want to take a trade from here and you spot this confluence, it should add enough confidence to your buy decision. Similarly, in a downtrend, if we are looking at this in a downtrend and the EMA and the ADX is less than 18, if the VZO crosses below positive 40, it crosses below positive 40 from this area, is crossing below positive 40. From this area in the chart where it is crossing above positive 40. This is the area in the chart crossing below positive 40. While the MACD indicator, this is the MACD indicator, while the MACD indicator shows a bearish crossover, and in this area where it crossed below positive 40, it shows a bearish crossover, meaning the MACD line crosses below the signal line in this area. This strengthens your sell signal. So by combining these strategies with proper risk management and stop loss placement, you can use the volume zone oscillator effectively across different market conditions. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, do not forget to like, subscribe and turn on notification bell so that you will never miss out on more trading tips and strategies. Thank you for watching and I will see you in the next video.